It's 8 o'clock already. At 11 o'clock, the finance minister is expected to stand on the floor of the parliament and present arguably what will be the most important budget of this government. And that's largely because of the economic backdrop we are in. The pain needs no introduction because GDP has plummeted, consumption has slowed down, and investment cycle has not really picked up. So what really is in store today? But before we talk about what is in store today, I want to simply make one simple case of the market positioning. What is the current market positioning? Now, when I say market positioning, what exactly are traders betting on? Are traders approaching the budget with high expectations? On markets, by and large, have been neutral. The two perfect indicator of looking at this is to look at the Bank Nifty and the Nifty. And this is where the positioning of the market is in terms of the Bank Nifty and the Nifty. Well, that's of course a think tank which also would be joining us, but there you go. This is the budget day returns and how Nifty has moved in the last couple of budgets. On 10th of July, which is 2015, Nifty was flat. Another budget 2018, Nifty was flat. 16 and 17 also, markets have not really done anything extraordinary. So what should one expect today? And fundamentally, is there logic, is there merit in believing that markets today are in for a surprise? Sandip Sabharwal will be just walking on the set now, and he'll walk us through the fundamental picture of, there you see Sandip is ready. So Sandip, why don't you walk into us the set right now? So that's Sandip Sabharwal. He would be joining us. But this is what I want you to just focus on. The 10-day after budget, what has happened to the market? And markets by and large, irrespective of good budget or bad budget. Good morning. How does it feel coming to studio dressed up on a Saturday morning?
It feels like missing a good squash.
But I think if the market positioning is anything to go by, was missing that squash game, will that be worth it?
I'm not so sure about that because I think this time, after a very, very long time, the budget comes in the background of a very significant global phenomena which is happening, where I think the global events are going to overshadow the budget in my view. So I think to that extent, I think the impact of the budget could be more limited than what it has been historically.
So focus on the coronavirus issue today or the budget speech today?
I think it's the coronavirus issue. I think the way it's expanding, the way the deaths are, I think it's an exponential move out there. And coronavirus in China is sort of like demonetization in India, where it stops everything, no economic activity, just stalls. India did not impact the global economy, but China impacts the global economy. So I think so we need to be cautious in the near term because of the fact that markets were trading at all-time highs all over. So if markets were not trading at all-time highs, we would not be so cautious. Even now as we speak, markets are just 400, Nifty, I think just 400 points off the top, which is not very significant. So markets still are elevated and they were not ready for any risks, and those risks are playing out. Now what the finance minister needs to do is something beyond what people are expecting. In my view, my expectations are very low, but the market expectations are very high. They want something on LTCG, they want something on big on disinvestment, they want something big on personal income tax cuts. I don't think everything can be delivered. Let's keep our fingers crossed.
I just want to look at this, Sandeep. This is how markets have moved from last budget. Nifty is actually flat. We may be at an all-time high, but Nifty is actually flat. Small and mid-cap indices are much lower than where they were right now. So we'll just come back to that graphic in a second just to establish where the markets was. There you go. Nifty, crude, gold, and the 10-year paper. So it's not like you are in a very, you may be nearing an all-time high or sitting at an all-time high, but markets are not overbought.
I would think it's more about global positioning because huge ETF flows have happened globally. Passive money has flown in majorly into most markets, and those ETF flows could reverse very fast. So I'm not concerned more about the long term. I think the long term picture in India could be improving. I think it's more to do with the short term, next 2-3 weeks. Yesterday we saw 4,000 crores outflow from global investors, and these are purely ETF flows. These are not active investors who are selling off, and these ETF flows are typically trend following. So I think that's the near-term issue which we have to grapple with. So even if there's, let's say, hypothetically a great budget, but still I don't think those ETF outflows out of emerging market funds are going to stop. So I think people need to be wary at this stage.
Keep expectations low.
Keep expectations low. Be ready to buy if there is a drastic cut. And I would think that the corrective move in the markets globally still has some way to go.
Okay, now before we allow you to escape, not for your squash match but for your breakfast, let's look at the most important data point, which is going to be the pendulum swing for them. It's not going to be revenue, it's not going to be tax, it's going to be disinvestment. And that data point will just come up on your screen, Sandip. I'll request you just maybe a step back because the graphic will be just coming here. For the disinvestment, Sandip, we were looking at a target of about 1 lakh crore this year. There you go, this is where we stand. 2015 it was at 41,000, what they got was 23,000. 2019 the number was 1 lakh and it is currently at about 18,000. Of course this will move up because you will do ETFs and all, but this will not go to 1 lakh. Will do you think there would be some fat assumption for the coming year on this investment?
So they are going to make fat assumptions, and 2017 and 18 figures, all of us know that they were not real disinvestment. It was HPCL sale to ONGC was one of the disinvestments. Then I think
Power Grid and PFC.
Yeah, so I think
all smoke and mirror.
Yeah, so those are not real disinvestment. That's one pocket to the other. Now,
these are the blocks they have.
So unfortunately, what's been happening is that the value of the PSU basket has been crashing continuously. All of us know ONGC used to trade at 400, it's at 100 rupees. Many NTPC used to trade at 250, it's at 100, 110. So the successive disinvestments by the government, by these ETF route, etc., they have just destroyed value. So they need to do strategic disinvestments, which they want to do. But the biggest chunk of that lies in oil PSUs. There is a global move towards not investing in fossil fuel-based companies. So I'm not really sure how that will go. So I think they will make big assumptions, all of us know, just to show that the fiscal deficit is going to be in control next year. Whether they'll achieve it, it's a big question mark, because the last figure, it's
going to improve, Sandip. They have still 1 more month left. ETFs and some other smokes and mirrors will bring the big figure higher. But it's a big miss from what was projected. I want to look at the strategic disinvestments, which could be the game-changing assets for the government, from Air India to BPCL, from Shipping Corporation to others. These are some of the important. There you go, that is where the target is, but I want to look at some of the assets which are going to be crucial from a government standpoint, where the strategic sale is going to be, or the needle mover on the disinvestment front. It's going to be that big fat kitty which will come from a combination of BPCL, SCI and Container Corporation. Sooty is an easy one to sell. This is the most difficult one. So Sandip, thank you very much for joining us.